Great. Welcome everyone to this session about financing innovation for regenerative agriculture. Glad you could make it. Feel free also to come a bit closer that we can have a meaningful interaction. There will be a Q&A session in the end. My name is Caspar Baumann. I work at Mondial. We develop and implement innovative solutions to finance the sustainable use of natural resources. And agriculture, sustainable agriculture, is really at the core of what we do. We do this through investment vehicles such as the Food Securities Fund that invests in emerging markets primarily, but also in partnerships with leading corporates such as Nestlé, whom we're glad to have represented on the panel here today. Food security is something that we all depend on, so we need to have agricultural supply chains that are environmentally sustainable. And today, I invite you on a journey to kind of trace those agricultural supply chains from the farms through the intermediaries to the larger consumer-facing goods companies and ultimately to us consumers. And we'll try to see what investment needs that we can identify linked to better environmental performance and where we can loop in and make a difference. The challenges that we're seeing resulting from extreme weather events and supply chain disruptions are difficult to address. At the same time, they are relevant for a really broad range of actors. So governments have an interest in it, private sector, financial institutions, and civil society. And we're really happy to have representatives of all these parts of our society represented on the panel here today. And I welcome Catherine from EIT Food to also present and introduce now. Thank you so much.
Thank you, Caspar and Claire Mondial. Slight height difference there. So I'm Catherine Foster, Finance Innovation Lead for EIT Food and the WEF Fellow for EIT Food. For those that don't know, the EIT Food is the EU's flagship and world's largest innovation community, with over 300 partners across industry, research, academia, startups, including a number of Swiss entities. Of course, now with the Horizon framework in place, we can continue those collaborations. And we have a mission to drive a healthy, sustainable, and trusted food system. We've supported over 600 startups and over 250 innovation initiatives and collaborations, attracting over 400 million in investments. Thousands of learners have also come through our training and education programs. Finally, we just launched a new Think Do Tank on resilient agriculture, which will align with our $30 million Regenerative Agriculture Landscape Initiative. And a key pillar of this Think Do Tank will be on finance innovation. So I'm very pleased to have this group of experts joining us today. But before we go to those introductions, I just wanted to survey the room because you are experts in your own right. And I wanted to know who here is from finance, investment, and insurance. Just a hands up. Philanthropic, catalytic, capital development, finance. Okay. International cooperation, government agencies, UN. Tech developers, startups, entrepreneurs, and accelerators. Okay. Researchers, think tanks. Others I missed? Wonderful. I'm now going to ask to pass the mic directly to our invitees to introduce themselves, their organization, and very briefly, what their definition of financial innovation is. Thank you.
Thank you so much, Catherine. Hello, everyone. I'm Stefania Mancini. I'm a director in the Agriculture and Food Value Chain Program at the World Business Council. Basically, my job is to support our members to scale up regenerative agriculture across their value chain. The first message I want to give to the room is value chain actors are investing in this transition. We recently surveyed also for COP45 of our members. They have committed to invest up to $9 billion to 2030 across 245,000 hectares and 110 countries. So what I can say is ag value chain players are investing, but there is an opportunity for you to invest. Really, agriculture is an exciting space, and you'll hear today. There are many opportunities to invest that span from non-refundable capital, so catalytic capital from philanthropies, lending, you'll hear from my colleague from Rabobank, investments, and of course also insurance. We heard in the session just before some of the innovative finance insurance instruments that are needed. So very much welcome your creativity here.
Thank you, Stefania. Owen.
Hello, good morning. My name is Owen. I work at Nestle. Always look forward to building bridges because we have one of the shortest commutes of any company coming to present here, as we're based just down in Vevey at the other end of the lake. And I had a good day yesterday speaking with lots of different financial organizations and other stakeholders around this topic of finance innovation, let's say. And that's actually my current position at the company. So over the course of this year, I've been exploring this topic and understanding how we can bring more of that innovation into what we do in our supply chains. The big priority for us is regenerative agriculture, making sure we introduce that into the farms that we source from and with the suppliers that we purchase from. And in terms of what is innovation in terms of finance, I think it's taking what we've done a lot of as a company up to now, but bringing in outside partners to scale it up. So where we might have done a rotational fund at a small scale with our suppliers in the past, we now need to do that at a much bigger scale using an additional financial actor to help make that happen.
Thank you, Owen. Lissy from Rabobank, please.
Yeah, thank you, and good morning, everyone. So my name is Lissy Smits. I'm Global Head of Sustainability for Rabobank's wholesale and rural business. Rabobank is, I think most of you are aware, is a large global food and agri bank. We not only finance large corporates, but also farmers, more specifically in the US, Brazil, Australia, New Zealand, and obviously in the Netherlands. So we have a very strong focus on agriculture and also making sure that our farmers are and remain financially healthy. When we think about financial innovation, we really think about how we can make and develop solutions for farmers, but also for value chain partners that are difficult to do with more conventional capital that really require partnerships, value chain actors to work together and valuing ecosystem services. It's a lot of creativity, so it's great to be here and be on this panel. And find those collaborations.
Thank you, and thank you for joining us. Valeria.
Good morning, everyone. I'm Valerie Remoquillo-Yeni. I'm the CEO of the Fourfold Foundation. We are a philanthropic, grant-making, and impact investing institution that's based here in Switzerland. And we're focused on food systems work and as well as nature-based solutions. For me, financial innovation has always come up as with the definition of this adoption or creation of new approaches in finance, particularly in products and services. So it could be innovations in products, in processes, it could be in technology, but I think a crucial piece that I think is part of that innovation is in people, in about institutions that are collaborating within this space. And I'm quite excited, and I'm also quite intrigued to see there aren't as many philanthropic catalytic funders who've raised their hands in the room. And I think that's part of the innovation that has to happen, is the involvement of more foundations in these kind of conversations. Building bridges should also be a space for foundations to engage more actively in this thematic, particularly in regenerative agriculture.
Thank you, very important. Casper, I think we can come back to the first question since we've heard from you and your role, unless you want to say anything more about what you're specifically working on.
Maybe just to address your point on innovation, I think where we are particularly interested is to understand how the supply chain works and how the various actors work together to see how the goods and payments flow along the supply chain, and see how the actors can use their role and their access to also channel financing in a way that maybe helps to identify mispriced risk and then opening opportunities for finance.
Thank you. We want to come back to the expertise on structuring the funds and those actors as well. But Stefania, I want to start with you. In terms of scaling innovation, financial innovation. We often think of scaling as very linear, about replicating existing financial mechanisms. Could you go into more detail about the need for financial actors and the innovation around that space and what you're doing?
Thank you, Catherine. Yes, with pleasure. And let's maybe just do a short intro for those that are maybe a little bit newer to this space. And for those that were also here this morning or listening to it, first of all, I just want to underline the sense of urgency and need to innovate in the agricultural sector. CEO of Howden was mentioning again this morning, 6% of yield loss per year in Europe. So this just means that the current agricultural model that we have is leaking. It's not, so there is a real need to change. Exciting news, we start to have growing evidence that when you invest in natural capital, so in agricultural models that regenerate natural capital rather than depleting it, we call it regenerative agriculture. You can call it whatever you want. So we invest in green infrastructure, we have a positive business case. So farmers, evidence that we have seen across countries, seen that farmers have a 15 to 25% increase in profitability. So this is important to mention. So it is a more profitable business we're investing. And probably one thing, another specificity of agriculture to mention is that agriculture is very fragmented, and today capital does not flow to farmers. Farmers today, I think studies say they receive up to 17% of private sector capital versus manufacturers and distributors were at 60%. We need capital to flow to farmers because that's where the transition is happening, and we're discussing in this morning panel about the need to distribute value and risks and costs. And so my second point is farmer centricity. Very much looking forward to the financial actors here in the room who want to innovate on those and innovate and flow capital to farmers. And the third point that is important, but I would not go too much into details, but if you want, I can bring ample evidence on that, is that as we're trying to transform agricultural systems, the landscape level scale is very important but just to achieve impact and to even solve things very simple like watershed rights, restoration of natural and semi-natural habitats. So I won't go too much into detail there, but there is a real need for landscape level, the investments that flow at landscape level, which means collaborations. I'm going to give you a few examples, of course, but the first thing to understand is we need a menu of solutions. So you're actually all welcome to come. We need solutions that fund non-refundable capital, like technical assistance. We need solutions that are linked to lending. You'll hear probably from my colleague from Rabobank on the need for concessional debt instruments that fund things like equipment. And then we need investments and also insurance products. What I'm particularly passionate about, because I feel this landscape scale is so important, is financial instruments that invest in marketplaces for payments for ecosystem services. So I'm going to mention two to you today that are concrete examples out there. One is in the US, it's called the Soil and Water Outcomes Fund. The other one is in Europe, it's called the Landscape Enterprise Network. And so these are two examples of mechanisms that are pooling in municipalities, water agencies, and what I call agricultural off-takers. So it can be food manufacturers like Nestle or Diageo, but also distributors and so retailers. And they all pay for the uptake of a specific basket of practices that lead to certain outcomes then in this landscape, because it's a sourcing landscape. And here, just to give some numbers, I want to be precise here, but in 2024, in one of their regions, which is in east of England, Lens has invested 3 million pounds and converted 14,000 hectares and reached 112 farmers. So you see, we're starting to get beyond supply chain financing to really landscape level financing, but there is much more to do. So very welcome your thoughts and creativity here to innovate, as I want to really stress, agriculture is a place of innovations where your contributions are needed.
Thank you. I think that landscape level collaboration is absolutely essential, and the elements not only about the ecosystem payments, but also about the inside the farm gate as well as outside the farm gate. So we're also looking at market infrastructure, the physical market infrastructure, storage, transport, those types of elements, as well as contracting. So these are all things that have to be sort of coordinated together. You're managing to bring a great number of stakeholders together with OPTB. Can you just say one final word about the collaboration and the type of actors you're bringing together?
Yes, no, thank you. Because inside the World Business Council, we bring members together, and there is one coalition, which is an action-oriented cross-sectoral coalition of over 25 members. And here we actually bring together stakeholders that are from the ag and food business, but also from the cosmetic and textile business. Because ultimately, when you look at agriculture, food, feed, and fiber all are grown in the same thing. And there is, I always tend to say, there is no such thing as a potato grower. They're always there. We're talking about when we're trying to transition a farm, we're trying to transition its full crop rotation. And maybe to talk about some of the collaborations we're trying to build there's some supply chain collaborations that can happen, because they might be all sourcing from the same farmer cooperative. So you can source, let's concrete example, you can source beetroot for alcohol that can go in cosmetic perfume, and for sugar that goes into food products. So that's an example of a project that is co-funded. Or in other countries like Brazil, soy and cotton are intercropped, and that's where textile companies and actors and large agricultural traders then work together there too. And so this is where the collaboration is needed to finance the transition, as there is no single actor in the room, nor even my colleague Nestlé, that represents the largest food company in the world, that can finance this transition alone. So that's why there is such a need for collaboration. And we didn't mention it, but just important to have in mind, and in Europe it's much higher, but from FAO stats, when you look at agriculture, 15% of agriculture is funded by governments, which means it's small, but it's significant. It's still significant, which means that we cannot fund this transition without bringing in also the public funding, and that's why we often talk about blended capital on that need. So we're not going to go too much, because we didn't ask, but I don't think we have many government representatives in the room, but that's one of the things that probably me and Catherine do a lot, is then talk to government representatives about the need to finance and repurpose subsidies to finance the transition together.
Absolutely, blended and beyond, as we say. Owen, let's talk about Nestlé. You have supply chains that originate in countries around the world. What are the compelling cases that you're working on, and examples that you can bring about that type of collaboration that's needed, and the role of corporates in this space?
Sure, yeah. So indeed, we are very diversified. We have operations in, I think we're sourcing from about 90 countries, and we sell our products to about 185 countries, so very global. And the main things that we buy are products like dairy ingredients, coffee, cocoa, cereals, and they come from many different parts of the world. And so the challenges are different wherever we operate. To give you a few examples, so on fresh milk sourcing, we often have a relationship directly with a cooperative, and we have full traceability and very good primary data. So this is an area which, unsurprisingly, is moving very quickly when it comes to decarbonization, improving productivity, and delivering a more stable and high-quality source of ingredients for the business. And if you look at what we've done over the last 25 years, we've actually worked directly with these cooperatives to drive investment into farm practices, such as improved genetics, such as improved machinery, understanding of how to run the dairy farm in terms of the business case. And you see dramatic improvements in many places, such as India, where we have our fresh milk sourcing in Moga, which is in the Punjab, and we have some of the best productivity rates and farmer incomes in the country in that particular case, because we have this direct relationship. We've used a lot of our own money, but we've also worked with the State Bank of India to provide at cost of capital, even below cost of capital loans to those farmers to help improve their productivity. In contrast, where we buy dairy derivatives in India, we have much less leverage, right? Because we're buying through a network of suppliers and intermediaries. And the farmers themselves are smallholders. They tend to be living in poverty. There's a lot of challenges in terms of improving or even reaching them, and then improving some of these things I talked about, the the quality of the animals that they keep, the way that they look after them, etc. And that's much harder to reach in terms of financing. So we need innovation there. We need a new partner to come in who has the financial network on the ground to reach those types of smallholder, which we can't do ourselves directly. So in that case, we've got one supply chain in a country which is very advanced, and we've got one that remains with a lot of challenges because of the different nature of our relationship as an off-taker with those types of farmer. Maybe just a couple of other quick examples. One would be supply chain finance. So we've done that in places like Mexico, where we've worked with BBVA on providing better payment terms for farmers who meet our sustainability KPIs. And that's been quite successful. Now we're looking at more a kind of rotational fund approach in that country, which may be able to offer below market rate credit to farmers to move faster. And we've also done a lot of work on coffee, including through our business Nespresso, who's worked with a lot of different partners. And in countries like the Philippines, where we've actually worked sometimes with grant money to help improve farm economics again, particularly amongst smallholders where there's no other current option on the market. So if, again, we think about innovation, how can financial institutions globally provide the products and services to meet smallholders, help improve their productivity, and have the right partners in those countries to meet their needs? That's currently missing in quite a lot of cases.
And it seems very complex, so replicating from one to the other is quite the challenge. And I think, do you have any specific takeaways or areas that you want to go forward in terms of that, of how we can actually amplify and replicate?
Yeah, absolutely. So we're really focused on dairy, coffee, and cocoa in our co-financing strategy, and some work on cereals. And that's deliberate because that's where we have the biggest impact as a company in terms of emissions, in terms of the hectares that we source from. And in all of those industries, there are commonalities between different off-takers. So, we speak very frequently with companies like Danone, for example, on fresh milk, or with some of our competitors on coffee, to look for those ways of scaling up to a landscape level. And we talked about Lens, where we're already doing that with Pepsi and other companies. We have a thing called the Rimba Collective in Southeast Asia, where we join forces with Unilever, P&G, and PepsiCo again to pay for ecosystem services together based on the offtake volume of palm oil in a region. But these examples tend to be quite isolated, and so now moving forwards we need to say, okay, how can we prove what works as Nestlé, and then as quite often the biggest company in terms of volume in these types of supply chain, how do we kind of take that to other companies and third parties and create schemes which everybody can get involved in and drive economies of scale?
Thank you. Come back to a few of those points if we have time. Lizzie, let's talk about financial institutions. With your experience with Rabobank, both in Europe and elsewhere, what have you seen in terms of the evolution, specifically given the relationship with the government in the Netherlands and how it sort of helped transform what you were doing there? How has that affected your programs elsewhere, your financing elsewhere?
Yeah, maybe good to start for Rabobank close at home, indeed. In the Netherlands, Rabobank finances a large part of the farmers, the production. Luckily, already 10 years ago, we started working together with Friesland Campina, with the Wageningen University, with WWF to develop what we call the Biodiversity Monitor, which has been a basis for us to really make a distinction between what are good practices on an outcome basis and what are the practices you want to encourage. So right now we're using that database to also be able to give incentives to the clients of the bank that we are feeling are doing the right thing. And so we have a lot of nice programs around that. So we work closely with Friesland Campina and their farmers, but also, for example, with Afico. We have two other special partnerships that are similar but are based on different methodologies and backgrounds. And we're just talking about it. One actually is with Nestlé the Netherlands, and Vreugdehill. They have their own program where they support farmers in regenerative agriculture. And we joined as Rabobank there to give the farmer interest rate discounts if they're in the, let's say, the higher performing category in terms of sustainability. We were discussing earlier that it's interesting that there's a lot of different frameworks. A lot of people develop their own frameworks to measure. So did we in the Netherlands, but obviously as an international business, we have different frameworks in different countries because all the realities are different. Also, whether you look at dairy or whether you look at soy, it's going to be a completely different way to measure that. So we also like to build coalitions based on different models and learn from that as well. So I think the one with Nestlé is a very good example where we follow your categorization and are able to give those farmers extra incentives as well. So helping the farmer doing different, getting rewarded from different parties in the supply chain. If we go a little bit further away from Europe, one very nice facility that we participate in Brazil is the Responsible Commodity Facility. This is actually set up by 3 UK retailers, Sainsbury's, Waitrose, and Tesco, who provide a first loss in a blended finance structure. Where Agri3 and FMO and Rabobank and IDB, if I'm not mistaken, are also part of the financing structure, giving farmers incentives to produce soy deforestation-free. So beyond what they're required to hold in legal reserves. So these are the programs that we really like to participate in, and I think we need to do a lot more of. So if there's anyone here out there today who has ideas and needs a bank, we would love to help and connect.
Thank you very much. And speaking of connecting, Valerie, would love to hear more about Fourfold and actually the role of foundations and philanthropic organizations in this.
I think that we start out with an understanding that with our philanthropic capital, we can actually do probably a lot more than many other players can, in the sense that we're probably have the most risk-tolerant capital out there. But at the same time, I believe it has to be deployed in the most conducive type of conditions. It has to be deployed in a very strategic way. So for us at Fourfold, the way we look at us engaging in the space of regenerative agriculture has largely been in 2 ways. Either it's directly working with social ventures, or it's helping to build that ecosystem. So and then a direct-to-venture kind of support that we would imagine is really trying to see how they can have a business case, how they can actually test or pilot ideas that will help them go to market more successfully. And we've done that, for instance, with a company that's based out of South Africa that works with artisanal fishers, and they wanted to be able to engage with chefs and with all of these culinary schools that would be able then to find it interesting to buy more sustainable fish with a direct marketplace engagement as well, using technology. Abalobi, that's a new social enterprise, has been able to make it to supermarkets. But to be able to get there from the farm to market or the fish to plate story really needs a lot of investments in the very early stage from philanthropic actors. So this is where I see our us part of this chain of innovation is actually coming in probably in a venture where they're trying to have hybrid models or trying to test out, can they engage with this kind of a consumer or target group. The other level that we believe is really important is in this ecosystem approach, where we want to be able to create platforms, for instance, or support platforms where all of us can meet. So I think that's a place where there's not a strong business case. There's probably not an investor out there. But if we as philanthropists are able to engage ventures to be matched with companies, such as what they do with Innovate for Nature, one of our other partners, to be able to find more investable ideas in nature-based solutions, that's a win for us as a philanthropist. And I think that's one way our limited but more risk-tolerant capital can be deployed. And maybe to the last point, I think it's normally the case that we lump philanthropic capital with technical assistance. So wherever you have a supply chain story, it's okay, the philanthropist comes in with a TA. And I think we as philanthropists and foundations start to think we can do much more than that. Or if we have a TA facility that we support, it has to be a bit more nuanced. So there are certain aspects that actually lead to growth, and that's what we should focus on for these kind of ventures. And I think finally there's also what I see is quite exciting, is more and more an appreciation of the need to strengthen the capacities of organizations. So instead of just program funding, also building resilience of organizations and people in those organizations. And that's a space where I believe in regenerative agriculture, but then also in other sectors, our philanthropic money can really be deployed meaningfully.
Thank you very much. Come back to a few of those points if we have time, for sure. I wanted to talk now about that element of risk and the feasibility, the structuring of finance mechanisms, and learn from Claire Mondale's experience there and how that actually relates to other sectors, other regions as well, because you have a very high success rate in structuring finance innovation.
Yeah, thank you, Catherine. So I think what we've learned in the agricultural space is really this need to consult with all the supply chain actors to understand, their strengths in the supply chain and how they can help de-risk investments. And this is something that we're doing in the Food Securities Fund, for example, where we really get more diversified, larger, up to corporate actors to help de-risk on a transaction basis so that we can get funding to flow to smaller aggregators and processors that work with smallholder farmers in emerging markets, in sub-Saharan Africa and Latin America, and really can implement as land stewards then those sustainable practices that we want to get implemented. In addition to that, we also see opportunities to de-risk at a more investment vehicle level, so that's something we do as well, working with guarantees, for example, that can again help de-risk those investment propositions as track record is being built to the point where then more mainstream and more institutional investors can also find confidence to back those solutions. I think the positive note is that those investors are already participating, so it's not just specialized ag banks such as Rabobank or corporates such as Nestlé that are engaging, but we do see participation from institutional investors already. As a next step, of course, we're always, the challenge in agriculture isn't solved yet, as we've heard, right? We need many solutions and we need to scale them up, but we're also thinking about where to go next. And what you said, Valerie, resonates a lot about looking at fisheries, which is a space that we've also started to support. Traditionally, an area where a lot of grant funding has been used, which is often also the necessary instrument, and it will continue to be a requirement. But together with the Bolton Family Foundation and the Marine Stewardship Council, we've started to explore how other financial instruments can actually help fishing operators that are on the water managing those stocks implement more sustainable practices. And we've developed a loan guarantee facility in this case, which helps those enterprises access more appropriate financing at more appropriate terms, and that is tied to a commitment to progress on sustainable management practices up to certification against the MSC standard. So I think it's one way where we've taken this approach and the learnings from a supply chain oriented approach in land-based agriculture and applied that to sustainable fisheries. And while the challenges in land-based agriculture are many, at least your cocoa trees don't swim away. So this is actually something that's quite impressive in fisheries. As oceans warm, fish stocks move. So you have situations sometimes where what has traditionally been caught has actually migrated to more appropriate, more temperate zones. So I think it's a stark reminder also of the necessity to act, and we look forward to innovating further in this space as well.
Thank you. So watch this space. It's actually an EU priority as well, as water is going to be the next and final KIC, Knowledge Innovation Community, water and aquaculture, et cetera, and fisheries. So I think that ties into what I want to spend the next maybe 10 minutes on, is just each of you identifying from what you've said or another example of a specific success, the challenges in getting there, and where the next opportunity is. But very briefly, because I do want to save time for questions, but really want to highlight that string of, okay, we achieved this, but this is the big challenge, and this is where we see the opportunity for the next initiative, project, or element. Let's start with Lizzie.
Yeah, that's a very interesting question. I'm thinking, well, I talked earlier a little bit about the data and the frameworks. I think it takes a long time, but I think also a lot of agreement between parties also to, if you talk about financing structures and attracting different types of capital, you also need to make sure that you're able to define the right type of KPIs, the right outcomes. I think for us, that's always the biggest challenge, because I think once you have the right structure and you find the right KPIs, you can attract different sources of capital around it. So yes, we've been very successful in the Netherlands with the examples I gave, and also internationally, we're really looking at the parties that are able to bring that credibility, making sure that you really get the outcome data at farmers level, and then drive it from there. So getting that, I think, is step one. And then finding the right parties around it. And yeah, for me, also an interesting question maybe to you is around what type of capital you feel is lacking most. I mean, I think in our case, it's more the long-term capital. I'm sorry, taking over your...
What we want is this type of interaction.
I was actually going to say just that, that one interesting aspect is that a lot of longer-term capital, as you say, is required because those changes take time. Right? If you think about replanting a coffee farm with a more resilient variety that can then produce, better environmental and economic outcomes for the farmers, that is a patient investment, but it's in a difficult context, and it also, needs to be aligned with maybe the more shorter-term purchasing commitments that the supply chain actors have. Right? So one challenge is really to resolve this mismatch, and I think there, catalytic funding can play a role by de-risking, those investment approaches so that both sides feel more comfortable to maybe enter a longer-term commitment than they would otherwise do. So this, I think, is a nut that we're trying to crack. And there's a lot of good progress, because I think the realization that these regenerative practices or better environmental practices, they also have a direct implication on supply chain resilience, which in the end, is very fundamental for the private sector as well. That realization is certainly there, and this, I think, gives a lot of momentum to look at these approaches. But it remains a big piece of work, and as Stefano said, the contexts are also very different, right? In the EU, for example, where there's a lot of government involvement through subsidy systems as well, which maybe in other contexts is less the case. So what works in one location doesn't necessarily apply to another location, but there are definitely lessons learned that can be, transposed, and also the approaches that we're taking of coordinating with the various stakeholders to find those solutions. I think that's a mindset that we can definitely copy and apply in other contexts as well.
Thank you. I'm going to pass it to Stefania then to comment further on that, as well as to give a wrap-up statement.
No, thank you. I was thinking the things that are most needed. First of all, we also need more agribusinesses involved, as you've seen here, but I would say I see always the same 50 around. That's not enough when you think about the number of players in the field. So we definitely need a stronger involvement for more players, as it's such a fragmented sector. And the second thing, depending on the maturity of the projects, but we were mentioning here some projects, some large projects that have achieved a maturity level, so that have gone beyond a phase where they only need non-refundable capital to start. That's when we need more commercial capital to come in, and that's why, I think that's what you wanted me to talk about, but that's why, for example, we are starting to talk to banks and are starting to build blended finance instruments where we can can bring in junior mezzanine tranches of capital in some of these more projects that have achieved a scale. I think there is a very interesting report published by the Rockefeller Foundation called Financing for Regenerative Agriculture. I encourage you all to read it because I think it lays out some of the basics, and sometimes there is some confusion, especially on the maturity level. So when are you applying for what? And then, but reminding ourselves, that's why it's such an exciting place of innovations, is that farmers often need a menu of solutions. So often here, we were explaining, be it in Brazil or Europe, we need different financing instruments that finance different things. For the independent technical assistance that farmers need to be able to convert to regenerative farming practices, this is definitely an activity that will always most likely be needed to be funded by non-refundable capital, so grants or subsidies, because that's the way it is. And then as I was saying, there are some hard things that, like concessional debt, where actors like Rabobank are investing in, and together with guarantees from off-takers, so that the loan is at a slower rate. I also heard some examples where the loan as patient capital, so that the loan only needs to be repaid after the transition period, as the upfront costs are so high. These are some kind of innovations that we need. Insurance, I won't go in, but there is a full room of innovations that are needed there. And but also we heard also then from Nestle on some of that supply chain financing that also needs more investments from private sector, from financial actors to come in.
Thank you. A really nice overview. Valerie, you were nodding quite
I
enthusiastically.
just wanted to add there that it's quite interesting to see where this handover happens, right? When does maturity happen for those ventures? Because on one hand, for us, I think a big success that I'm proud to say from also our portfolio of our partners is that they are able to really use strategically and meaningfully the grant funding that we provide them. But at what point do you say this is actually enough success, it's good success, that now you're mature enough to actually have another kind of capital holder step in? And I think we look at that at the micro level, but we can also look at that more in a larger scale with the kind of funds that you manage. It's really this readiness to take that next step, because success can also be a really good thing to propagate and continue in a grant space. But when do you hand that over to the next investor? And that mindset, I guess, is also a conversation that happens with you and the venture, but it also happens with the capital holders in the room. Like Lizzie was alluding to, kind of a set of KPIs. Are we aligned on those KPIs? Do we see a clear vision of exit together for this sector or for this farmer or this group? And having that alignment of our own interests enable us as well to have a very clear view vis-a-vis the agri-enterprise of when we start and when we exit and when the next player comes on board. And I think success can actually be can lure us into prolonging relationships probably when we should probably cut it loose and also hand it over to the next steward.
Blended and beyond, that transition is really important. Owen, does that resonate from your perspective with Nestle in terms of the challenges and success in the next stages?
Yes, it does. The thing I wanted to focus on was what we describe as this sort of tension between the way that companies like ours purchase ingredients and the need and the ability to claim progress and benefits. So, I talked about fresh milk earlier because we have let's say, a more straightforward supply chain. We're buying from cooperatives. We know where the milk is coming from. We can measure that quite accurately. We have primary data. So the investment case is quite clear there. We can also work with banks because they've got that visibility on what's going on. In other supply chains, we don't have that same kind of benefit, let's say, or visibility. And so if you look at things like cocoa and coffee, we have good traceability as a company, but as an industry, that's not necessarily the case. And what we do on the ground tends to be kind of directly with the farmer. Things like the income accelerator program we have in cocoa or the Nescafé plan in coffee. We're working directly with farmer groups who then supply to suppliers who then supply to Nestle. And those schemes are great and having a really positive impact, but to get to scale, we kind of need something bigger than that. We need an industry-wide approach which essentially enables Nestle to have confidence that it's buying more sustainable coffee from a range of different suppliers. So we need that flexibility in the supply chain, and that's why we need to move to a more landscape level approach. We need cross-industry collaboration. And also from a financing perspective, that's going to ultimately be more interesting because you will get more scale, and therefore some of these kind of concessional elements may not be required in the long term, or if they are, they may not be as burdensome or as difficult to achieve as they could be if it's lots of fragmented schemes all over the place. So yeah, I think what we're trying to do is work towards that in cocoa and coffee. It's not always straightforward, and you have a lot of tension between trying to do that and the ability to maintain flexibility and competitive advantage, as a company. And so we're working with a lot of that at the moment and trying to find solutions, and I think that they will come because the business case will make itself when we look at the impacts of climate change on supply that affect everybody in some way, and there's no escaping that ultimately.
Thank you very much. Casper, I'm going to give you a final word, and as I step into the floor and get some questions and provocations from the other experts here in the room.
Thank
and
you.
Also, I just want to say that the speakers also want to ask each other questions. I'm very fine with that as well.
Good. No, I'm sure there will be interesting questions from the audience, so don't hesitate to come forward. Well, I think reflecting on what has been said, I think it's very encouraging to see how many initiatives are already underway, right? So there is not a state of inaction, but things are being tried and tested. I think we need everyone's collaboration on this. So, if it is a question now or afterwards, please come up to the panelists and speak with us. We're happy to connect and see how we can join forces.
Thank you very much. Any questions here? Wonderful.
Sorry.
Go ahead.
Oh, sorry. Hi, my name is Michael from ITMO Limited. There's two terms that I haven't heard from the panel, and I was wondering why. It's the Paris Agreement and carbon markets, especially under Article 6 and the new compliance carbon market. Because you could create, I don't know all your operations, but I strongly believe that all of your operations fall under countries that have NDCs and, of course, have agriculture as either number one or number two in terms of the highest emissions. So why haven't you mentioned that? And can you not try to create a win-win situation where you help the country with their NDC and reduce and remove emissions, help the farmers with additional finance in terms of carbon credits, and help yourself as well to reduce and remove your emissions from your supply chains? Thank you.
Owen, go ahead, please.
That's me. So the reason why I'm not talking about that is because it's not core to our strategy. So we don't. So carbon credits, I agree they can play a role, but we don't buy carbon credits from voluntary markets. Our strategy is based on reductions and removals within the supply chain, so much more of a insetting approach. Having said that, there is an opportunity, if farmers could do additional projects as part of a financing scheme to provide that revenue, and someone else can buy the credit, then that can work. But the reason why it's not sort of front of mind for me is that that's not core to our approach as a company. I think it can play an important role, and it's come up a number of times. But we'd have to avoid double counting and make sure it was always additional to what we were doing as a company on the farm itself.
Yeah, and maybe to add to that, from Rabobank perspective, when I mentioned ecosystem services payments, for us, we do see it as an important part that can help a structure, or can help farmers to complete the picture. But I think most importantly is that the farmer is doing the right thing and the right practices, and then getting payments through carbon, and hopefully later on other nature-based solutions will actually help to make that structure stronger and give more value to the farmer. So it's not a goal in itself, but we do see it as an important element that we actively look into as well. But yeah, I agree with the double counting. It's still something that we need to be careful with as well.
Stefania, did you want to say something?
No, maybe an important element when we talk to governments and policymakers is that agriculture is has many priorities like food security and food sovereignty and rural development, then also, of course, decarbonizing the sector. So whenever we talk to policymakers, all these things are into consideration. And so it's not as easy as saying with these practices you'll have X tons of emission reductions per hectare, and that's also another thing, the context specificity of agriculture, that today you can't compare. We don't have a standard number. It's very complicated. I don't want to add, but I have many examples that show the diversity, not only the diversity on the carbon emission reductions, but then also the diversity of incentives today in place, depending from countries, which means that if you're investing in the same asset class, let's say rapeseed in arable crops from France to UK, the net profits that the farmer has are just like simple four times more in France than the UK. Why? Because the incentive scheme, the yields are just different. So that's the context specificity makes it quite hard.
And within the EU projects, we support a number of initiatives that focus on carbon, digital, biodiversity, development, etc. But again, it is very context specific, and the replicability and the different complexities involved have, of course, been a big challenge in terms of integration across the board. Is there another question or other comments? We have time for, oh, we have one right at the back. Thank you.
Hi, my name is Tayfun, and we are working on developing some financial tools to support regenerative farming, and one of the biggest challenges that we are facing at the moment is to create a structured KPI models with data interoperability, because when it comes to regenerative agriculture, someone is talking about pollinators, someone is talking about the number of the worms in the soil, birds, or whatsoever. So it's highly fragmented, and from your perspective, how we can have a progress to create a structured framework. And the second question, regarding the payment for ecosystem service models, it also has a potential on the supply side, and we see huge interest on the farmer side. But the biggest challenge is on the demand side. There are very few initiatives who are supporting this, and there is not enough private finance. So from your perspective, how we can increase the demand from private sector side? Thank you.
Stefania.
Thank you so much. I'll start, but then I'm happy to give my co-panelists the floor. I agree with you. The sector is highly fragmented on the measurement side. What I can say in the past years, that have been impressive efforts done to drive convergence and alignments on some of the core impact areas that we all want to measure at farm level, aggregate at supply chain, and report and disclose at corporate ESG level. I'll cite a couple of tools, but for sure an industry reference tool on farm gate measurement is today SCI platform regenerative agriculture framework, so I encourage you to look it up. It makes a beautiful link between a basket of practices and the key outcomes. At WBCSD also for 2 years we have tried to aggregate that data into corporate disclosure and looking at the voluntary and mandatory reporting frameworks to see where those incentives are, because that ultimately it's very important for a company to be able to be incentivized by their investors for these investments. It's still not flowing fully, but one thing that I can say is among the 50 agribusinesses I have the pleasure to work with, there starts to be strong convergence. So be it on climate, be it on water, water quality and quantity, be it on some of the key biodiversity indicators like and on soil health, there starts to be really a strong convergence. Not fully there, but I encourage you to look at these two tools, and there are 10 core indicators that you can see also on the WBCSD website. I can give you the QR code later. On the second question, does anyone else want to take it?
Maybe before we go there, to add quickly on the indicators, this is a good point. What we've actually seen in practice is that there is often good overlap between the kind of indicators that companies are looking for and that financial institutions are also considering. So while it is definitely a very complex space, if you look at it on a case-by-case basis, we do see quite good opportunity. I think one thing we should also keep in mind is that it's not only about identifying which KPIs we all agree on monitoring, it's also having the data to actually do that monitoring. So I think it starts even in some cases a bit earlier, and this is something that we are considering also in the investment vehicles that we are developing to see, okay, what KPIs can we look at, but then also do we potentially need actually technical assistance funding to make sure that data is collected, and it's typically a mix of publicly available information, some satellite imagery, but then to really be specific locally, some data has to be collected on the ground as well. So I think that is an important point also to consider in the development of investment strategies and vehicles, so that MMRV really works solidly. On payment for ecosystem services, maybe Owen, you want to comment on that?
Yeah, I'll bring you back to this example of the Rimba Collective, which I mentioned earlier, which is a landscape-level effort between 4 big CPG companies and a financing partner to reduce the risk of deforestation and invest in conservation projects in Southeast Asia. We all pay a fee for those services, effectively, right, into this collective. Now, it's quite unusual in that we were not able to claim actually any benefit from that for the first few years, right? First 3 or 4 years, we didn't say this is creating, 10,000 hectares of restored forest in Nestlé's supply chain, because we couldn't make that claim, right? Now they've done a lot of work on actually linking the projects to our specific sourcing within the region, and we're now getting into the area of being able to talk about carbon benefits. But beyond carbon, it's complex, and so that puts a lot of people off. If you say, we want you to pay for ecosystem services, but you can't claim any benefit in your reporting or to your investors or to your stakeholders, it's not a very compelling case. So we need to do more work on having the right corporate frameworks in place to say, okay, this particular ecosystem service scheme helps meet this KPI, which may not exist at the moment on biodiversity or water. And secondly, we need to have that sort of granularity on the data to say, within a landscape, we know how much volume we're sourcing, but we need to know how much we can then claim as an overall benefit from our payment into that scheme. So I think that's probably why you haven't seen it take off as much as it could do, and it needs to be worked on, yeah.
Thank you very much. I think I'm going to pass it to Casper now to wrap up the session and make any final statements.
Great. Well, thanks again, everyone, for joining this session, and thanks to the panelists for their contributions. I think there's a lot of excitement, as you can see, and a lot of action around regenerative agriculture. And we were discussing, ahead of the panel, that term and what is the latest word that is being used. Like, in the end, what we're trying to achieve is the sustainable production of food, right, in a way that safeguards the ecosystem in which that food is produced. And I think that's something that we can all agree on is really vital to us and our future. So it is a space where there are challenges. Supply chains can be complex, they can be disrupted. Climate change is not making things easier, and sometimes politics and tariff policies are also not making things easier. At the same time, there is a need for those supply chains to work, and there is really a big commitment from all the various actors that you've heard on stage and that are also represented here in the audience to make this work. I think what is encouraging, again, things are happening. There are investment solutions out there already that you can participate in, that you can support, that you can get funding from, depending on where you sit with regards to your organization. So I think that is again an invitation to connect and collaborate, and maybe look beyond the initial front that you're seeing when you think corporate, bank, foundation. Go behind, see what really motivates, what are the missions and the targets that are behind those organizations. And I'm sure that you will find ways to collaborate and integrate what you are trying to achieve and align with those partners. So thanks again for joining us today.
And thank you to our speakers. Very much appreciated.